is Corey Dutton. I am a private money lender, and in this video, I'm going to explain to you the real difference between 9% and 12% hard money. Let's face it, there's a ton of hard money, private money options out there, and they all range in cost from, I've seen as low as 8 or 9% to as high as, 18%. And there's a lot of different options. In this video, I'm going to explain to you what the difference between a 9% hard money loan and 12% hard money loan really is. And it's not that big. What's one of the differences between 9% and 12% hard money? That is going to be the speed of funding. In a higher interest rate loan, the speed of funding is typically a lot faster than with a lower interest rate loan. And why? Well, the number one reason is in the approval requirements. For higher interest rate private money loans, the approval requirements are usually less than with a lower interest rate, say, for example, the 9% hard money loan. The documentation requirements for a 9% hard money loan are typically a lot more stringent. And if your goal is to close your private money loan quickly, you may not want to chase the cheapest interest rate available because of what I said here, the documentation requirements. Why? Why is that? Because a higher interest rate hard money loan is usually going to be asset-based, whereas a lower interest rate hard money loan, such as, say, a 9% hard money loan, is going to be based sometimes on your personal credit and income. And so now what about the actual cost difference between a 9% private money loan and a 12% private money loan? Let's do the calculation. We have a $100,000 loan amount in this example, and we're borrowing a private money loan for 4 months. This is an interest-only loan. So for a 9% interest rate, the cost of that interest is going to be $750 a month. So over 4 months, that's $3,000. Now let's do the same for the 12% private money loan. That's $1,000 a month times 4 months, that's $4,000. So at 9%, over 4 months, that $100,000 is going to cost you an interest $3,000. At 12%, it's going to cost you $4,000. So the difference there, $1,000. Not a lot over 4 months, especially when you consider that a lot of people are putting up $1,000 in earnest money initially on these properties, essentially willing to lose that earnest money on any investment property purchase. A lot of real estate investors are. And the cost differential between a 9% private money loan and a 12% private money loan is only $1,000 over 4 months. I mean, that's ridiculous. That's such a small amount of money to squabble over when you're comparing your hard money loan options. But there's a higher cost than $1,000 that I use in this example to actually consider. What about the cost of losing that deal, losing that real estate investment deal because you were trying to chase the cheapest hard money loan that you could find? Now, we talked about the speed of funding. The lower the interest rate, typically the slower the funding deadline. There's a good example of a private money lender out there that's offering 9% interest rates on fix and flip loans, but those loans are taking, at the time of this video, 21 days to fund. And if you have 3 weeks to wait for the lowest interest rate, and there's a possibility that you could lose your deal, is it worth losing your deal over such a small amount of money, the $1,000 that we showed in this example? Is it worth losing your deal? Probably not. And even if you're using a private money lender that's in your real estate network, that's not licensed, doesn't have a website, was referred to you by someone you know, and they're going to fund your deal at, say, 9% or a low interest rate, be wary, because that lender may not have the experience or the willingness at the end of the day to fund your deal. And you may lose that deal anyway because you were chasing the cheapest private money loan that you could possibly get. This is Corey Dutton. I'm a private money lender, and in this video I do hope that what you took away is that the 9%, the lowest interest rate private money loan, may not be your best option depending on your particular goals with a real estate deal. If you have any questions or comments, leave them in the comment section below. And if you liked this, please like it or share it with someone that you know that you think could benefit from it.